Hello, Tim Tucker here from United Way Central Ohio Tax Time Training. In this video, we're going to talk about whether it's better to file married filing separate or married filing jointly. And specifically, we'll focus on the Ohio marriage tax penalty. In this video, we'll cover the following topics: the so-called Ohio marriage tax penalty, and we'll cover how to determine whether filing MFS is better than filing MFJ. Let's talk about what I mean by the Ohio marriage tax penalty. For Ohio, you are required to use the same filing status for your state return as you do for federal. More often than not, at the federal level, it is better to file jointly rather than separately. However, in Ohio, sometimes filing separately is better than jointly, even when that's not true for federal. I think the best way to explain this is to look at what I consider the simplest example. So the Ohio tax is zero when the Ohio tax base is less than $26,050. The Ohio tax base is income minus exemption, and I'm just considering a simple example with no deductions or special credits. The Ohio exemption for low incomes is $2,400. So if one's income is less than $28,450, which is that $26,050 plus the exemption amount of $2,400, then the Ohio tax is going to be zero. So let's consider a case where the taxpayer and the spouse each have a W-2 job and earn exactly $28,450, no dependents, no other special credits or deductions. So on the federal case, there's not going to be any difference between filing as two separate returns or one joint return. It'll be a wash in terms of dollars. But for Ohio, if we file separately, each one has a tax liability of zero. If we file jointly, the total Ohio tax liability is $982. Wow, that's a big penalty for being married. So how can I tell which is better, jointly or separately? Other than a simple case like we just showed, it's difficult to tell. You can prepare three returns, the taxpayer separately, the spouse separately, and then the taxpayer and spouse jointly, and compare the numbers. But that's very time consuming. We typically do not have the wherewithal to do that when we're with clients. We have a tool, however, where we can do a quick assessment of comparing two separate returns versus one joint return. I'm showing the website for the tool here. I will also include that in the notes below the video. The tool will be updated for tax year 2024 once the IRS in Ohio publishes drafts of their data. Right now it's working for 2023. One note that the tool uses formulas as shown below to calculate taxes rather than the tax tables, which most software programs do. So you may see a discrepancy of a few dollars between tax layer results and what the tool provides. Let's go ahead and look at some examples. I'm at the web page for the tool right now. Up here you can click for instructions, which are quite simple. You can click here to see some caveats, which is primarily some things that the tool does not cover and a request to report any bugs to me. The way the tool works is all these white boxes are things you can fill in. You only need to fill in what is relevant for your case. So if you only have W-2s, you only fill out what's the boxes for W-2s. For the year of birth, we really only care about that if the taxpayer or the spouse is over 65. If not over 65, you can just leave this date of 1980 in there. So let's take a look at our simple example we talked about before, where each taxpayer and spouse each earn $28,450. So I'm going to put in $28,450 for the taxpayer, $28,450 for the spouse. Go down to the bottom and click calculate. And what this shows you in the summary down here is that for Ohio, two people filing separately have zero tax liability. Two people filing jointly have the total liability is $982. For federal, it's a wash. The numbers are the same. And then you can see that for the total federal plus Ohio, the difference again is $982. And then there's a summary down here which will tell you which way it's better to file. When you're done, you can clear all the values and get ready to enter new data. Let's run through another quick example. Let's bump up the income a little bit. Let's say each taxpayer and spouse earns $40,000 from their W-2 job. So we put in $40,000 for each one, click calculate, and we can see that filing jointly is about $300 worse than filing separately. And the summary down here tells us it's better to file separately. One thing to note about the output here, the bold text indicates line numbers in the federal 1040, or for the Ohio return, you can see the IT 1040 or the schedule of adjustments or schedule of credits. Of course, there's lots of different permutations you can try here. Let's go through one more example where we actually have some dependents. So let's say we have the taxpayer earns 20,000, spouse earns 20,000. We know that if we don't add anything else, that it's going to be advantageous to file separately. But let's say that we have a couple of kids, dependents under 17, eligible for the child tax credit. So let's do 2 there. Now, filing separate, you would still get this, but if I say that these same 2 kids are eligible for earned income credit, now let's see what happens. We calculate. Okay, here we see that the total, the negative sign here means it's a refund. So we see that you get a much bigger refund filing jointly versus filing separately, and that's because of if you go back and you can see the earned income credit for the jointly doesn't happen if you file separately. If you're interested in seeing why it works this way, let's explore a little bit about the math behind the Ohio marriage tax penalty. But to do this, let's first understand why the federal tax does not penalize marriage. I've got some snippets from the federal 1040 instructions showing the tax rate schedules for married filing jointly and married filing separately. And you can see they've got different tax rates for both. And you'll notice that the taxable income levels is exactly double for the married filing jointly versus the married filing separately for the same tax rates. Not shown here, but you probably know this, the federal standard deduction for married filing jointly is exactly twice that of filing married filing separately. So in the simple case, if a taxpayer and the spouse each have taxable income of X dollars, the tax on that X dollars for filing separately is exactly 1/2 the tax on the twice X dollars for married filing jointly. Continuing our explanation, let's take a closer look at Ohio. As shown here, you can see that Ohio has a single tax rate schedule for all filing statuses, where the percentage of tax paid goes up with income. And the table on the right shows a decreasing exemption amount as income goes up. So you can see that unlike federal, there is not a separate tax rate schedule for filing separately or filing joint. Let's go through an example to show how this penalty works. Consider a taxpayer and a spouse, each with a W-2 income of $30,000. And again, there's no deductions or credits in this simple example. If the 2 file separately, each has an exemption of $2,400 based on their income level, and an Ohio taxable income of $30,000 minus $2,400 or $27,600. Now, the first $26,050 is taxed at a rate of $360.69 over $26,050 for a rate of 1.385%. The remaining $1,550 is taxed at 2.75%. So you can see that most of the income is taxed at a lower rate, and only a small portion of the total income is taxed at the higher rate. The total tax before credits is $403 per person for a total of $806. What happens when that same couple files jointly? They get 2 exemptions of $2,150 each. Note the lower exemption because the income is higher. Total exemption is $4,300. So the total taxable income is $60,000 minus $4,300 for a total of $55,700. Now, the first 26,050 of this is taxed at the lower rate of 1.385%. The remaining 29,650 is taxed at the higher rate of 2.75%. So you can see that more than half of the income is taxed at the higher rate. The total tax before credits is $1,176. There is a joint filing credit, but it does not make up for the discrepancy. So my conclusion is the Ohio marriage tax penalty exists because Ohio has a single tax rate schedule for all filing statuses, coupled with lower exemptions for larger incomes. Thanks for watching. I hope this video was useful. Links to the tool used in this video, FAQs, and useful websites are posted in the description below this video. If you have questions or comments, leave me a comment on my YouTube channel, or ping me on Slack, or send me email to timmythetaxman@gmail.com.